Hey folks, it's Dr. Jeff Camarda with a piece I wrote for my Forbes.com column, actually the initial piece, called When Fiduciaries Really a Four-Letter Word. Investors have finally gotten savvy to fiduciary and know that it means advisors who must put their clients' interests first. If you're a fiduciary, you have to put your clients first, which is what Camarda is and has been for a long time. While it seems pretty black and white, it's not as easy as it looks and still leaves lots of room for lots of investor abuse. Getting a real fiduciary who's not covertly selling you expensive commission products can be a real challenge, but getting this right can be critically important and literally could cost hundreds of thousands or millions in wasted family wealth if got wrong. Determining the difference between fiduciaries is fast and easy if you know how, but many consumers may not know how to conduct this important background check. Now, advisors who claim to be fiduciaries can be of three sorts. One, those that simply lie about it to get you to buy a high commission product, poorly disclosed high commission product. There are a lot more of those out there than you might care to contemplate. Number two, those who are actually dedicated, exclusive fiduciaries, legally required to put you first, as is Camarda. And here's the squishy, dangerous part. Number three, advisors who have both fiduciary investment advice licenses and commission investment sales licenses, a condition known as dual registration. Presumably, you only want the number twos, dedicated full-time fiduciaries, no commission sales license, and it's actually quite easy to sort them out once you understand the landscape, as well as flag the ones and threes. Now, commission sales agents, we used to call them stockbrokers, are regulated by FINRA and typically have sales licenses like Series 6s or 7s. They are officially called registered representatives and are sales agents of broker-dealers, companies who deal in investment securities for a profit. They make money by taking sometimes hard-to-spot commissions and markups on investments. If you remember that the dealer in broker-dealer means the same as a car dealer, you get the point. Most folks don't expect car sales reps to look out for their best interest, and registered reps are no different. It's perfectly fine from a regulatory standpoint for them to sell products that make more money for the advisor at the expense of consumers' wealth health. Perfectly legal, but not well understood by most consumers, even pretty sharp, savvy consumers. Fiduciary investment advisors, officially investment advisor representatives, work for registered investment advisors like Camarda and have a legal obligation to put you first. RIAs, registered investment advisors, are regulated by the SEC and actually comprise a whole different industry than broker-dealers. So there's dual registered folks. The number threes are both licensed by FINRA as non-fiduciary commission sales agents and by the SEC as fiduciary IARs. Dual registration, and I'm being charitable here, can make for some confused advisors who may forget what hat they're wearing and unwittingly sell you maybe a high commission product to a consumer who mistakenly believes or is even allowed or led to believe that the advisor is acting with their fiduciary IAR hat on. Of course, consumers can become hopelessly confused, remembering only that the advisor once told them they were a fiduciary, and they just believed and trusted that instead of questioning every recommendation to see if it was really a product pitch with a big commission, or reading the reams of disclosure documents that broker-dealers rely on to manage their liability. Clearly, dual registration can expensively blur the line between what's best for the advisor and what's best for the consumer. Not surprisingly, academic research has found that in Florida at least, dual registration is associated with significantly higher levels of advisor misconduct, like fines, license suspensions, client complaints, settlements, and so on. It's not hard to imagine why, since such dual registration confusion could breed situations like the following, taken from an actual report from an investor using a large broker-dealer. Right here in Jacksonville. The investor believed the advisor was a fee-only fiduciary who did not sell on commission and who put the investor's interest first. When asked, the advisor confirmed this was the case. Yes, I'm a fiduciary. Yes, I always put the client first. Yes, I only charge fees, no commissions. When questioned about if he was acting as a fiduciary on a $1 million annuity found on his statements, an annuity that was showing no growth, had hard-to-find internal costs of some 6%, costing the investor $60,000 a year, and which had generated an estimated commission of some $80,000 to the advisor, his response, I kid you not, was, "Well, I'm a fiduciary, except for that." Situations like this are actually encountered quite frequently in practice and clearly have the potential to be quite detrimental to a client's wealth. This is a really big deal since much, if not most, of the financial services industry remains in a buyer beware stance with advisors who can maximize their commissions perfectly legally at the expense of investors' families' long-term wealth health. Where consumers believe advisors are putting consumers first, but advisors are legally free to line their own pockets at consumers' expense, the potential for massive consumer harm is enhanced. This is not to say that fine, completely ethical work isn't routinely conducted by duly registered brokers who remain cognizant of their respective duties, but the conflicts of interest are severe. The cheese keeps moving in the investments game, and many consumers may prefer to just skip the extra work and risk of using the duly registered when seeking fiduciary advice. So now you know the difference. The really quick way to tell the difference: go to BrokerCheck. BrokerCheck.figure.org. Just Google BrokerCheck. This portal serves up public record background check data on both registered reps and investment advisor reps, not fiduciaries and fiduciaries. You see a screen where you can check out an advisor using a variety of approaches, but you probably just want to plug in the name of the advisor of interest. When your humble author plugged his own last name in, he got a bunch of Camardas, far more than expected really, including himself and my wife and partner Kim. Two other advisors named Camarda appeared in the same row as me and Kim, and we noticed their registration status as follows. You can tell by looking for three icons. If there's a round B, that means a broker, a commission advisor, a commission registered rep. If you see an IA, that means investment advisor, fiduciary. If you see both B and IA, it means they're duly registered, can have the commission hat on one breath, the fiduciary hat on in the other breath, confusing and probably expensive for the consumer. If you see PR, by the way, in a circle, that means previously registered, like Kim and myself. We gave up our broker licenses probably 18 years ago, I'll say, something like that. Those on either end are duly registered as both an RR and an IAR, or a fiduciary investment advisor, and a non-fiduciary commission broker. So be careful when you see both of those. In any event, this is a really, really important area. I know that I tried to give a very simple explanation, but consumers really have a hard time, we found, understanding this, but it's really so critically important. If you're looking for dedicated advice purely in your best interest, with any conflicts of interest clearly disclosed, and you know exactly what you're paying. You know what you're paying. You want to make sure you have a dedicated fiduciary advisor that doesn't also take commissions. You know, sometimes people say, Jeff, you know, your fees they seem like they're kind of high. And I say, well, actually, they're quite reasonable, we think, and this is why. The difference is we tell you what they are. They're right there in every statement. We don't try to hide them. That's not the case for much of the financial investment advisory world. So be careful. They want to make it look as if it's free and there are no expenses, but often they're higher and hard to find. So now you know. If you're looking for a fiduciary without sales commission conflicts, you go to BrokerCheck. Don't pick someone showing a B. In upcoming articles, we'll look at how to mine BrokerCheck for other valuable background check and misconduct information. But for now, you know how to find the twos if you really want them. Sorry to be so long-winded. This is really important stuff. Please share it with your friends and family who may not be using Camarda. And again, you can find a lot more stuff both at the Camarda website, camarda.com, and if you just Google Camarda and Forbes in the same phrase, that'll pop my Forbes blog, and you'll be able to look at all my contributions to Forbes. Thanks so much for watching. Until next time, this is Dr. Jeff Camarda.